Today marks a milestone. The U.S. House is ready to pass the Genius stablecoin bill, the first major crypto law, as part of a historic crypto week. This framework mandates full reserves and transparency for U.S. dollar-pegged digital assets, enabling stablecoins to be used for everyday payments. With its Senate approval and imminent signing by President Trump, it signals a new era where crypto becomes part of mainstream finance. The push included a bold compromise prohibiting the Federal Reserve from issuing a central bank digital currency, a CBDC, appeasing conservative concerns. That means private stablecoins gain clear legal status, while protecting citizens from digital surveillance. For the first time, the U.S. defines crypto money as private, not state-controlled. Institutional interest is still early, but growing. Current estimates show less than 5% of Bitcoin ETF holdings belong to pensions and endowments, yet demand is sharply rising. The Genius bill and regulatory clarity are drawing new players into the game, signaling the start of real institutional entry, well beyond retail hype. Bitcoin's rally continues, hovering around $119,000 to $123,000. Although today saw a slight pullback after procedural delays, overall sentiment remains strong due to the impending stablecoin law and reduced political uncertainty. Altcoins are also benefiting, with Ethereum up about 20% this week, signaling returning trust in decentralized platforms. In parallel, crypto-focused companies are accelerating. Bitcoin Standard announced plans to go public via a SPAC merger, bringing over 30,000 BTC onto their balance sheet with up to $1.5 billion in new funding. This shows a direct pipeline from legislative clarity to market growth, on-chain assets turning into real-world investment power. Traditional financial institutions are stepping into crypto territory. Citigroup quietly filed documents indicating they're exploring a US-based stablecoin tied to the Genius framework. At the same time, PayPal is expanding support for crypto transfers across borders, making digital assets more accessible to everyday users. This participation from established giants signals a shift. Crypto is no longer a niche tool. It's becoming woven into global payment infrastructure. And today's changes lay the groundwork for faster, cheaper transfers that benefit both consumers and businesses. In parallel, global capital is starting to flow into decentralized finance platforms. New data shows that total value locked, or TVL, in DeFi has crossed $80 billion for the first time this year, with major increases seen in Aave, Curve, and Lido. What's significant is that user activity rose by 25% this week, indicating genuine engagement, not speculative hype. These strong fundamentals demonstrate that DeFi is building real tools, lending, yield, and liquidity that rival traditional finance. And today's legislative progress gives these platforms added credibility and legitimacy. Tech giants are also taking note. Amazon Web Services just launched a new blockchain toolkit that supports Genius-compliant stablecoins, letting developers integrate secure transactions into cloud apps with ease. Meanwhile, Microsoft is moving ahead with pilot projects using blockchain for its digital identity systems, supported by solid regulatory guardrails. These advances show how big tech is preparing for a future where crypto moves beyond finance into daily digital services. And it's all possible because of yesterday's legal breakthroughs. Consumer sentiment is undergoing a dramatic shift. Surveys from major polling firms show that 68% of U.S. adults now feel more confident in using crypto for purchases since the Genius bill passed. Roughly 35% reported planning to convert a portion of their savings into stablecoins or Bitcoin in the next 30 days. That's a significant jump from just 22% before the bill. This change isn't just popularity, it's behavioral transformation. And it means the policies of yesterday are already influencing how people think about and use money in real life. Even the job market reflects the momentum. LinkedIn reports a 40% increase in job postings for crypto compliance and digital asset risk management roles in the past 2 days. Companies across finance and tech sectors are racing to fill these positions, preparing for a world where crypto is regulated, trusted, and mainstream. For viewers, this signals more than just financial news. It highlights emerging career paths, new industries, and opportunities that didn't exist weeks ago. As crypto regulation gains clarity, payment infrastructure is evolving fast. Circle announced a partnership with a major U.S. court system to pilot stablecoin-based payments in fines and fees, an unprecedented move in public finance. Officials are testing automated transparent payment workflows, and users will be able to pay with stablecoins backed by Genius-compliant reserves. This marks the first municipal-level transaction plan using digital dollars, showing how yesterday's legal moves are becoming today's financial tools. Cross-border trade is taking notice. A consortium of Central American countries signed a memorandum to pilot Bitcoin for intergovernmental settlements, backed by new SEC clarity. They will settle agricultural exports and energy purchases directly in BTC, reducing reliance on traditional currency rails. This practical shift demonstrates how nations, big or small, are recognizing Bitcoin as a viable medium for international commerce, embracing speed and transparency while cutting costs. 13. Meanwhile, regulators in Europe are harmonizing their frameworks to align with the US Genius approach. The EU Council announced today that it will fast-track stablecoin regulation compatible with US standards to avoid fragmentation and support transatlantic cooperation. This means that innovation won't be confined to one region. It could spread across the Atlantic, making crypto infrastructure interoperable and global. For blockchain developers and investors, this opens doors to seamless international deployment and broader market reach. 14. Not to be left behind, Meta, formerly Facebook, confirmed plans to relaunch its digital wallet, now supporting Genius-compliant stablecoins and major crypto tokens. The revamped wallet will integrate with Instagram and WhatsApp, enabling users to pay friends, shop online, or donate, all with stablecoins regulated under the new US framework. As social platforms embrace crypto natively, we're seeing the first moves toward the real-world use of digital assets in everyday communications. 15. Corporate treasury strategies are also adapting rapidly. A survey of Fortune 500 companies revealed that 22% have now allocated a portion of their cash reserves to Bitcoin or stablecoins as of this week, up from just 7% pre-Genius. CFOs are rethinking cash management, driven by inflation protections and faster redemption access. This institutional shift signals that businesses are treating crypto not as a fringe asset, but as a key component of sustainable financial infrastructure. The IPO market just saw a thunderous awakening. Today, QuantumScope, a quantum chip company targeting banking applications, debuted on NASDAQ and surged by 118% within the first hour of trading. Its valuation exploded past $9 billion. Investors are pouring in, believing that the intersection of quantum computing and decentralized finance is the next trillion-dollar frontier. This signals a coming storm of tech-driven financial disruption that could rewrite the rules of global capital. Page. Goldman Sachs sent shockwaves through Wall Street today by forecasting that ETH could surpass $12,000 by year's end, driven by rising institutional demand. According to their latest research, Ethereum's Layer 2 ecosystem is exploding, and traditional financial institutions are beginning to rely on Ethereum for real-world settlement of tokenized securities and smart contracts. Ethereum is no longer an alt, it's becoming the core of a programmable financial universe. 10. The US job market is shifting rapidly. Traditional banking just reported the steepest weekly job cut in 6 years, over 12,000 roles slashed. Meanwhile, Web3 startups like OpenWallet, Lightning Bridge, and LedgerX announced over 2,000 new hires. This isn't a shuffle, it's a labor migration from legacy systems to decentralized infrastructure. Human capital is following innovation, and the new financial titans are being built right now, from the ground up. 5th, the merger of the week just dropped. Fidelity Investments is acquiring crypto exchange Gemini to create a hybrid financial platform that integrates traditional assets with tokenized products. This marks the largest fintech acquisition in a year. Fidelity plans to fold Gemini into its brokerage, retirement services, and HNWI analytics, essentially turning Gemini into the engine of next-gen digital banking. It's not just evolution, it's a full convergence of old and new financial orders. Breaking news tonight, the U.S. House of Representatives just passed the Digital Asset Tax Clarity Act, which exempts crypto transactions under $1,000 from capital gains tax. This is a game changer for microtransactions. Buying coffee with BTC or subscribing to a service with USDC is now not only possible, but tax efficient. It's the green light for mass crypto adoption in daily life. The revolution just got practical. This isn't just another day of financial news. It's a tipping point. If you're still watching from the sidelines, now is the time to act. Crypto is going mainstream. Finance is being redefined. Don't miss your chance to be part of it. Like this video, share it with someone who needs to wake up and hit subscribe, because tomorrow's money is already moving today, and you deserve to be ahead of it.